Alrighty, let's kick this bad boy off with a little bit of IRobot earnings. Let's talk about IRobot earnings. Obviously, there's a lot of big companies reporting earnings this morning as well. But we're going to take a look at IRobot. This is recorded, obviously, after they reported earnings. But we will see as far as what Wednesday morning has for us. I can't wait to see. I'll be at work, so I won't get to do anything in depth, but we'll see afterwards. Maybe I'll make something if you like it. So let's talk about iRobot. Down 10, nearly 11% after hours. Why is that? That is ugly. So iRobot posts a holy cow. Non-GAAP EPS of 32 cents, negative 32 cents, I should say, beats by 14 cents. Gosh dang. GAAP EPS of negative 64 cents. No. It's ugly. It's ugly. The money lost is ugly. Revenue of 192.54 million, down 19% year over year, beats by 11 million. That is what I would consider to be ugly. I have no clue. Shoot. So what do we have going on? So shares of iRobot are lower in after-hours trading after the company warns on revenue trends. Revenue is down 19% during quarter one, and operating loss of 14.4 million was recorded. Not an awful loss, all things considered, for that awful EPS line, but we expect that our near-term revenue will be challenged as traditional retailers work down existing inventories, prioritizing demand for essential products and managed through reduced operating hours, limited foot traffic, and temporary store closures. Nevertheless, we have been encouraged by strong growth over the past several weeks in e-commerce sales, modestly better than expected sell-through trends in domestic retail stores, and solid overall demand for Roomba i7 and S9 robot vacuums and the Brava Jet M6 robot mops. Let's look at some of these in-depth things. Let's look at their actual report here. So for the highlights here, first quarter revenue of 192.5 million, decreased 19% year over year. Yikes. The largest driver of the shortfall of the company's February 2020 targets was the first quarter 2020 revenue was the inability to completely fulfill anticipated first quarter demand for certain premium robots due to design-driven engineering and supply chain challenges that were unexpectedly complicated by the impact of the pandemic on our organization. Wow. Which makes sense. There's a lot of suppliers that come into this. There's a lot of things in play with manufacturing and producing stuff like this, and then supply chain. I mean, there's a lot going on right now. The first quarter 2020 revenue performance reflected declines of 28% in the U.S., 14% in Japan, 11% in EMEA from the first quarter of 2019. GAAP operating loss for the first quarter was 20.2 million compared to a GAAP operating income of 22.3 million. So they actually made operating income there of 22.3 million. Last quarter, this quarter, they lost $20.2 million. That's $40 million difference. Not looking good. You don't like to see that. Net loss per share was 64 cents compared to the 78 cents lost in this quarter last year. So actually an improvement overall in terms of net loss per share. Definitely something to consider there. Non-GAAP loss per share of 32 cents versus last year, this quarter, was 96 cents. So there was definitely some improvement there, and I think there's reasons for it, and you'll see in this next one here. Following authorization of iRobot's board of directors for a $200 million stock repurchase program, the company repurchased 663,000 shares of its common stock at an average price of $37.65 during the fourth quarter for a total of $25 million. So nothing actually major in terms of that. 25 million out of the 200 million spent. Obviously, they'll probably undo the rest of it. As of March 28th, 2020, the company's cash and cash equivalents short-term investments was 263.5 million compared to 256.4 million at the end of 2019 and 200.5 million as of March 30th, 2019. So overall in the last year, they definitely have gained some money in the last year, positive stuff. So cash piles looking good. They're looking to reduce cost, obviously, in many ways. So reducing workforce, conjunction with the workforce. The company has suspended the go-to-market plans for its robot and lawnmower. This decision primarily reflects the likelihood of significant delays in the 2020 commercial plan. So when that comes back, it'll be definitely interesting because I think the demand for that will be a little bit higher than they expect. I think it's going to be very good demand for that lawnmower. That's crazy. But if we look at business highlights, recent business highlights, this is what we really care about. They on April 24th, 2020, IRobot's request for an exclusion from the Roomba vacuums from the Section 301 tariffs was granted by the United States Trade Representative. That's right, let's go. This exclusion is effective on August 7th, 2020, and allows iRobot to seek a refund of Section 301 tariffs paid since 2018 of September 2018. I said that weird. So that's good. They could get some money back here in the next quarter. They could help their operating income line. So we'll see that. In addition to naming Julie Zeeler, the current VP of Finance, to succeed Allison Dean as EVP and CFO effective May 4th, iRobot also appointed current Vice President and GM EMEA JJ Blanc as CCO and Charlie Carral as Chief Supply Chain Officer, or the SCO, obviously is what we call them. The company successfully introduced the Roomba S9 vacuum in Japan and China this quarter. Definitely like to see that. Continued progress in expanding the company's community of engaged users who have opted in to its digital communications to over 5.1 million, up 18% since the end of 2019, and 170% since the same period 1 year ago. Massive stuff there. In early April, iRobot consolidated all of its education products and services under the iRobot Education, providing access to educational robots, online resources, and programming to inspire the next generation of roboticists, programmers, engineers, and scientists. They continued recognition of iRobot as an innovator by NPD and Fast Company, while the S9's exceptional performance and extensive functionality received awards and rave reviews from Good Housekeeping, CES, RealHomes.com, The Real Housewives of Georgia, Oprah Winfrey, The View, and IF International Forum Design. Active involvement in several relief initiatives as well. Good for them. Financial expectations. So, given the market conditions, the company is not updating its outlook, as a lot aren't really, so that doesn't scare me at all. And then finally, we want to look at the balance sheet on this company. You do see the difference in terms of the cash and cash equivalents. So, 248 million versus 239 million in the same last quarter. So, definitely an improvement in terms of cash. Accounts receivables dropped quite a bit. Inventories dropped a little bit. So total current assets, you actually see a decrease because that accounts receivable has gone down. So they got that cash and they definitely used it. Overall total assets of 820 million versus 920 million last quarter. So if we look at total current liabilities, actually total current liabilities paid down quite a bit. So that's where they used that cash for. 138 million total current liabilities versus 202 million in the same or at the end of last year. So very nice. 1 quarter to eliminate 60 million off your accounts payable is big. And honestly, total liabilities in general went down big as well, because you see no real change in the long-term liabilities, but 203 million versus 268 million in the same quarter at the end of last year, I should say. So overall, you see that actually they have 4 times the amount of assets that they do in terms of liabilities, which for a company that isn't making profit, I think is pretty awesome. I don't know about you, but that excites me. So IRobot is, it's hard to value this thing right now. So my cost basis is under $50 on this company. For my shares, do I want to own more of this company? I do, but at $60, I don't know if I want to own it at $60. If I see another dip to, right now, thankfully it dropped down to 54. If it hits the $50 range, I would love to pick up plenty more IRobot, because I really believe this company is doing good things. The balance sheet's definitely going to be able to survive this, and they're exempt from these tariffs now. So I think this company's got a lot going for it. And the Brava mop, fantastic in terms of that. And you think about the lawnmower potential too for that automated lawnmower. It just seems awesome. Everyone but, besides dads that are bored whenever they get home, want that to mow their lawn. Come on now, we're talking about the digital age. These kids are growing up, they don't even know how to turn on a lawnmower, okay? They can't start a lawnmower. They're going to need this lawnmower, okay? But yeah, I hope you enjoyed.